Hi there, it's Bill with Smart Trades, and going to take a quick look at the long-term picture in the Dow and look at popular Elliott Wave analysis and a possible alternative count um, that I tend to favor. At any rate, this is in the with the yellow text here. This is the very well-known count by Robert Prechter, and there's a variety of other people, including people that have criticized my long-term count that favor this count or a variation of it. And the basic idea is that the 1929 high was a wave 3, the 1932 low was a wave 4, and from there we have a 1, 2, 3, 4. The 1970s correction is a 4, and excuse me, that the peak in 2000 is a fifth of a fifth, and from there we need to correct all the way down to the previous fourth wave of one lesser degree, and that is at minimum the 1974 low around 570, or what Prechter's looking for is down to the bottom of the 1932 low. So that takes us into the 400 to 40 range. At any rate, two things I'd like to point out. One, just the idea of proportionality. The idea in terms of this count is that we already have A down, we have a B up, and that the next decline, C, is going to take us down to the previous fourth wave lows. Well, you can see clearly here the proportion of C relative to A is just absolutely humongous. It really doesn't make any sense that they're really of the same scale. And this is probably the more important point. I'd like to bring your attention to this yellow trend line. This is the trend line used by, again, some of my critics and also by the famous Elliott Wave analysts. And I would like to point out that the market first hit that trend line around the 5,200, 5,300 area. From there, it wound up rallying to over 14,000. In other words, we had a 9,000 Dow point rally from the trend line. Now, to my way of thinking, if your target, and I put that in quotes, is exceeded by 9,000 Dow points, in this case about 160%, perhaps there's something wrong with the target. And that would be the my thinking is that indeed this isn't a series of this isn't a 1, this isn't a 3, and this trend line really isn't valid. And you have to ask yourself again, if you've rallied 9,000 Dow points above your 5,200 target, is indeed your target correct? Well, bottom line is it's not really of any value. Okay, now what I've done is I've kept the same chart here, but I've eliminated the yellow notations, and here's my count. Basically, looking at this as a series of 1-2s, let's start with the 1929 high to the 1932 low. And instead of having that count as a 3-4, it's a 1-2. Again, the rally into the mid-30s into, I guess it's 1942. That's also a 1-2. The 1960, late 1960s high down to the 1974 low. Again, another 1-2. Now, looking at this in the semi-log scale, you might say, well, that's a very shallow decline. But in fact, we declined from Dow over 1,000 down to about 570. So nearly a 50% retracement here. It's just mitigated by the way that it's scaled on the semi-log scale. Nonetheless, again, you can count that out. 1-2, 1-2, 1-2. And if that's the case, we are only in a wave 3 of 3 of 3. That's a mouthful. Anyway, The implications of that are that we've already corrected to the previous fourth wave of one lesser degree. Moreover, we may have even completed the wave 4 correction altogether, or it may, turn out to be more complex and as I stated previously, go sideways essentially out towards 2016 or so. But the bottom line is, from these lows, you have to look at the possibility that we have an ABC complete. It touches a parallel trend line very close to the lows in 2009, and further evidence that this is a 3 of a 3 is that was where the peak momentum occurred. And again, the fact that we blew right through the trend lines based on the idea that this is a wave 4, wave 3 and a wave 4 instead of a 1 and a 2. It's a fairly radical departure from what most Elliott Wave analysts are saying, and keep in mind that even in this count, we basically could go sideways to lower for the next 6, 7, 8 years, but in the longer term, it provides a much more bullish outlook, and certainly worth looking at here as long as the trend lines and the support levels continue to hold. Anyway, thanks for watching and have a great week.